I'm Rolando Bernabé, and this is my portfolio for SIEFORE 7074. This is my team, and these are the contents we're going to see in the presentation. We start with the IPS, the investment objectives. We have 4 investment objectives. The first one is to maximize retirement savings for workers born between 1970 and 1974. The second one is to use a diversified investment strategy. The third one is to balance capital growth and risk control. And the last one is to align with a long-term investment horizon. The portfolio risk, we identify 3 risks. The first one is the market risk, because fluctuation in asset prices can affect the portfolio's value, especially due to economic or political changes. The interest rate risk, because changes in interest rates can impact the value of bonds and debt assets within the portfolio. And the inflation risk, because the loss of purchasing power due to rising inflation could reduce the real value of accumulated retirement savings. Now we continue with the financial indicators that could affect the portfolio performance. There are many different indicators, but the most important ones are the following. The Fed's fund rate. A higher Fed rate can reduce equity valuations and increase the appeal of U.S. fixed income assets. The 20-day TA Mexico, because high domestic rates improve returns on peso-denominated debt instruments within the portfolio. And the CPI Mexico, because persistent inflation reduces real returns, particularly on nominal fixed income instruments. Now we have the macro outlook in Mexico. We have the inflation that remains high above Banxico's target, eroding purchasing power and reducing real returns on fixed income investments. The economic growth, the GDP is projected to grow only 1.5% in 2025, and the political risk, because politicization of the judiciary and weakening of key regulatory bodies, among other factors, can increase legal uncertainty. Now we have the macro look in global terms. The inflation, according to the latest IMF projections, global inflation will fall to 4.2% in 2025 and 3.5% in 2026. The economic growth, global economic growth is projected to be 3.3% in both 2025 and 2026, which is below the historical average of 3.7%. And the political risk that remains a major concern for businesses and investors in 2025, fueled by social unrest, sudden policy shifts, and the rise of populist governments. Now we can start with the asset allocation. The asset allocation criteria was based on four main aspects. The first one is the conservative risk profile, focus on capital protection, minimizing exposure to high volatility assets and prioritizing safer liquid assets like bonds. Capital protection, to ensure the portfolio maintains value, protecting against inflation and market fluctuation. The asset diversification, because we put higher allocation to bonds and income-generating assets with limited equity exposure. And finally, benchmark, because we review portfolios of other Afores to have a basis for allocation. The initial asset allocation was on March 27, and we can see in the graph the initial asset allocation percentage for each asset class. Now we can start with the debt section. We will see the instruments selected and their respective characteristics. We start with UDI bonos. They are fixed rates, and these are their characteristics. Now we continue with bonus M. They are also fixed rate, and these are their characteristics. Here are the CETES, the floating rate bonds. At this point, it's important to say that the bonds that are marked in green are sustainable bonds. We continue with INC bonds, and in this part, it's also important to say that FEFA 24B is a blue bond. We continue with corporate bonds, and now with bank bonds. At this point, it's also important to say that every selected bond offers an attractive return, have a low medium risk, and have a good credit rating. We continue with the international ETF debt. We select 2 ETFs, and these are their characteristics. Now we can see a graph of the debt distribution, where we can observe that government debt has the greatest weight in the portfolio debt section. The amount invested in this section was 72 billion pesos. Here we can see a breakdown of the government debt distribution, and the amount invested in this section was 60 billion pesos. Now we continue with the private debt distribution breakdown. We can see the breakdown for banking bonds and corporate bonds, and the amount invested in this section was 10.5 billion pesos. And finally, we can see the foreign debt distribution breakdown, and the amount invested in this section was 1.5 billion pesos. And now we continue with the equity section. And again, we will see the selected instruments and their respective characteristics. We start with the local ETFs. And in this part, it's important to say that MEXTRAC is an ESG tilt Mexican equity ETF. We continue with the international ETFs, the stocks, more stocks. And then we can see the equity distribution breakdown. We can see that domestic ETFs have the greatest weight in the portfolio's equity section. The amount invested in this section was 19.5 billion pesos. And in the equity sector allocation graph, we can see that we diversify our investments in many different sectors so that we can reduce the risk of concentration. We can see here the equity distribution breakdown. And now we continue with rates. We select two fibras, fibra Macquarie and fibra Danos, and these are their characteristics. We also select a fibra E called Infraex fibra, and these are its characteristics. Now we can see the rates distribution breakdown, and the amount invested in this section was 3.5 billion pesos. We continue with the structured products. We select two CKDs. The first one is AINDA CK18A and Delta CK18. These are their characteristics. We also select a SERPI. It is called PGGVPI21D, and these are its characteristics. And now we can see the structure distribution breakdown, and the amount invested in this section was 5 billion pesos. Now we continue with the portfolio evaluation, and in this graph, we can see the debt maturity chart that shows the distribution of the repayments over time. It helps us to visualize when debt payments are due and the overall debt profile. We continue with the status yield curve that shows the relationship between the days to maturity and the yield to maturity. It illustrates how the yields varies depending on the length of time until the debt matures. And the curve also helps us to understand market expectations. We have here more metrics for the fixed income portfolio. We can see that the 97% of the bonds in the portfolio have a credit rating of AAA, and 3% of the bonds in portfolio have a AA credit rating. The table of coupon frequency shows the coupon payment frequencies in days and the corresponding total amount in billion of pesos. A frequency of 28 days corresponds to 5.5 billion pesos, while 182 days corresponds to 58.5 billion pesos. And in the weighted average term table, we can see that 72% of the bonds in our portfolio have a maturity from 1 to 5 years, and the 28% of the bonds in our portfolio have a maturity of 6 or more years. Now we continue with the portfolio metrics. We can see that the portfolio shows a strong annualized return of 14.76% with moderate volatility of 7.22%. The Sharpe ratio of 1.98 indicates good risk-adjusted performance, while the trainer ratio of 1.99 reflects efficient compensation for market risk. The daily 95% bar of minus 0.83% shows the potential daily loss under normal market conditions, and the low beta of 0.07 suggests minimal sensitivity to overall market movements. Now we conclude with the portfolio performance. In the chart, we can see the initial gains in the early days, followed by a period of decline and then a recovery phase. Despite short-term volatility, the portfolio ultimately increased in value, ending above the starting point at 101.5 billion pesos. Now we have the final asset allocation on April 28th. In the graph, we can see the initial asset allocation percentage, and in the left side of the slide, we can see the final asset allocation percentage. And that's it. Thank you for your attention.